Hi, this is Elliot Eisenberg of Graphs and Laughs, here to catch you up to date on the latest residential sales data for the month of September. In September, in Hillsborough County, single-family home prices slid just 0.8% year over year. That was the best performance across all three counties and both types of properties. Multifam sales prices declined 4.8%, but that was the best performance for multifamily across all three counties. Sales activity increased 12.9% on the single-fam side, and they increased a stronger 20.7% on the multifamily side. That was the best multifamily performance across all three counties. Sales price as a percentage of list price continued to weaken. It fell to 95.6% on the single-fam side and 94.6% on the multifamily townhome and condominium side. Pending sales slid a scant 0.3% on the single-fam side, and they jumped up 3.2% for townhomes and condominiums. Lastly, inventory in months continues to rise. It's now 4 months on the single-family side, and for townhomes and condominiums, it's 5.6. In general, multifamily is performing weaker than single-family is. In Pasco County, single-fam home prices year over year declined 4.8%, and on the multifamily side, they declined about double, they fell 10.7%. Sales activity for single-family units jumped a pleasant 12.6%. On the multifamily side, it was pretty much the opposite. They declined 15.8%. Sales price as a percentage of list price continues to decline here like it does everywhere else. On the single family side, it's 95.5, and on the multifam side, it's a substantially weaker 93.2%. Pending sales slid just 0.6% on the single family side, but on the townhome and condominium side, they slid a relatively large 27.3%. But remember, multifamily is quite mercurial. It can be based on sales activity and new housing, new starts that took place a year ago in a condominium complex. Lastly, inventory in terms of months continues to rise here like elsewhere, but it remains quite low in Pasco County. On the single family side, just 3.8 months. That's the slowest amount of inventory in terms of months across all three counties and both types of properties. On the multifamily townhome and condo side, it's 4.7 months. That's the lowest number across all three counties for townhomes and condominiums. Here too, like elsewhere, multifamily is weaker than single family. In Pinellas County, single-family home prices slid 10.5% and multifamily prices slid 13.9%. Quite large percentage declines. The good news, however, is that sales activity year over year is way up. It's up 26.5% for single family. That's the best performance across all three counties and both types of properties, and up a still strong 15.6% for townhomes and condominiums. Sales price as a percentage of list price continued to decline, and it's quite weak here in Pinellas at 93.1% for single family homes and 91% even for townhomes and condominiums. Pending sales are also way up, just like sales activity is up. Pending sales are up 25.3% for single family and up a strong 11.7% for multifamily properties. Lastly, months of inventory continues to rise here. It's at 4.2 for single family units, and for townhome and condominiums, it's at a quite large 7.9 months. Here, like everywhere else, multifamily performance is meaningfully weaker than single family performance. Turning our attention to the national economy, GDP in the third quarter of 2025 looks to have been very, very good, well north of 3%. That said, GDP growth for the fourth quarter of 25 and the first quarter of 2026 looks to be weaker. The economy is probably going to catch an air pocket, if you will, due to changes in policies coming from Washington, D.C. As for inflation, it continues to very slowly rise. And that's giving the Fed some heartburn, if you will. But moreover, the labor market and unemployment is also rising, but also very slowly. This combination of rising unemployment and rising inflation is making the Fed's job very difficult. As we know, starting in January of this year, the Fed kept rates constant all the way through to September. And in September, they dropped them by 1/4 point. In October, just recently, they dropped them by another 1/4 point. And I suspect that the weakening labor market will cause them to drop rates again at their next meeting in middle of December, assuming that inflation doesn't get out of hand and either stays where it is or just gets marginally worse. We will see. But the Fed really has a difficult time because they can easily solve inflation by raising rates, but that would hurt unemployment, or they could lower rates, which would help unemployment, but hurt the rate of inflation. In terms of mortgage rates, we've caught a break, and mortgage rates have fallen not a substantial amount, but a pleasant 1/5 of a point roughly. It's occurred because the 10-year Treasury, off of which 30-year mortgages are based, has come down because of weakening in the labor market and the expectation of additional interest rate cuts. My expectation in terms of recession stands at about 30 to 35%. I think that next year, in general, lower interest rates and the stimulative effects of the passage of the One Big Beautiful Bill Act by Congress should give us some stimulative help starting in second quarter or so of 2026. Turning our attention to the national housing market, there's not much to say. The housing market continues to struggle with the headwinds of relatively high prices, relatively high rates, and relatively low inventories. As a result of that, sales activity in September continued its pace of seasonally adjusted and annualized at 4 million, where it's been for almost 3 straight years, and at least 1 million to 1.5 million below the normal rate it should be at. That said, inventory is rising, and months of inventory is now at about 4.6 months, about a year higher than it was a year or 2 ago, 2 years ago at 3.4. So inventory is rising, and that should give buyers an opportunity that they haven't had in quite some time. If we turn our attention to the Florida economy, it continues to do well. GDP growth is good, and population growth is excellent. This is something that Florida has been excelling at for the last number of years and is in no rush to stop doing, if you will. That said, the housing market in Florida continues to struggle and continues to cool. The growth in prices and activity that we saw from mid-20 through mid-23 or late 23, early 24, we knew had to end as COVID goes away and people return to the office. Things return to a more semblance of normal, and prices here are objectively high across Florida. So this weakening in the housing market that we see in Tampa isn't exclusive to Tampa. It's happening all across the state, in Jacksonville, Orlando, in Miami. All these markets are becoming buyers' markets. Lastly, the price declines that we're experiencing are likely to continue. And this isn't a bad thing. This is not 07, 08 a replay. What's going on here now is that owners have a substantial amount of home equity, and the decline in prices will improve affordability, and that's good for almost everyone.